I think what happened, especially looking at what was happening on Monday night, because all of those trends continued on Monday night. In fact, gold hit a new all-time record high. It was within $10 of 3,500. That's how much gold had gone up. It was above 3,490. Now, you may expect some profit taking at a round number like that. We were almost halfway between 3,000 and 4,000, and we had only just breached 3,000 like weeks ago, and now we're almost halfway to 4,000. But the dollar was getting killed. The euro was above 115. There was a 97 handle on the dollar index. Stock futures were selling off. Bonds were under pressure. They didn't make new lows, but they were on their way. And so I think looking at what was happening in the markets, the advisors to Donald Trump got to him and said, we need to do some damage control. You need to walk back that Truth Social post. And so on Tuesday morning, early in the morning, Donald Trump said, hey, of course I'm not going to fire Trump, Powell. He's going to be there until the end of his term, or I'm not going to do anything with Powell. And the market had a huge rally on that. And, it's hard for me to believe with all of the market savvy people that are in the Trump administration. A lot of people have come, from Wall Street, right, that are there. And they know that the markets are going to move big on comments that come out of the White House, even though nothing actually happens, right? Just somebody saying something, not actually doing anything, but just a post on Truth Social can cause massive swing in the stock markets, in the currency markets, in the crypto market. I'm sure there are people in the Trump administration that are trading off of it. How could they not be, given the size of the moves and the fact that, no actual news. I don't even know if it's insider trading because there's nothing actually happening. These are just comments that really don't mean anything. And in fact, I think the comments are specifically designed to impact the market. I think Donald Trump's comment about Powell was, oh my God, the market's getting killed. I need to turn it around. So let me reassure the markets that, there's still Fed independence, because that was what people were worried about, that, this means that we're not going to have an independent Fed. We're going to have a Fed controlled by the White House, and that's going to be bad, as if, it hasn't been bad all along. But I agree that the more you politicize the central bank, the worse it is, because all the political pressure is for easy money. That's why it's ridiculous for Donald Trump to be accusing Powell of being political, in that Powell is not cutting rate, because that's political. So the fact that he's holding tight is more of an independent move, because the political pressure is to cut. Now, he should actually be raising rate. And I think the fact that he's not raising rate is because of political pressure.
Let's rewind to Monday night, probably one of the most revealing market sessions in years. Gold doesn't just rally, it explodes to an all-time high. Not just a little push, I'm talking $3,490. We were literally within a whisker, $10 of $3,500 an ounce. Think about that. Just a few weeks ago, we were talking about gold breaking through $3,000. Now, we're halfway to $4,000. Now, what typically happens when gold runs this hard, this fast? You'd expect some profit taking at a nice round number, that's normal. But what made this move different was everything else happening at the same time. The dollar was collapsing. Getting wrecked. The euro was pushing above 1.15. We saw the dollar index dip below 98. That's huge. Meanwhile, stock futures were rolling over. Bonds were getting hit. Again, not quite at new lows, but the pressure was building. It was one of those nights where everything screamed, the system is creaking. And right at the heart of it was gold. You want a signal? That was your signal. But then something happened, or more precisely, someone posted. The next morning, Tuesday morning, Donald Trump comes out on Truth Social and says, hey, of course I'm not going to fire Jerome Powell. He's got a term. He'll stay there. I respect the Fed's independence. Oh, really? Now come on. Let's be honest with each other. Do you really believe Trump just woke up and decided to reaffirm his love for central bank autonomy? That was market damage control. That was someone, maybe a whole team of advisors, looking at the overnight carnage and saying, Mr. Trump, the dollar's in free fall. Gold is making Powell look like an amateur, and you just broke the bond market. Maybe you walk back that post about firing the Fed chair. And voila, reassurance, markets bounce, stocks recover, dollar firms, mission accomplished. You see how this works? You don't even need policy anymore. You don't even need action. All it takes is a post, not legislation, not an executive order, not a statement from the Treasury, just a post, a sentence, and trillions of dollars shift hands. You don't need to be a market maker when you can move markets with your thumbs. Now, here's where it gets more interesting. We've always known markets were sensitive to Fed policy, but what we're seeing now is that even the appearance of undermining the Fed's so-called independence is enough to send shockwaves through every asset class. And don't think for a second that people in Washington don't know this. There are enough former Goldman Sachs and BlackRock alumni floating around the political orbit that you know exactly what's going on. These guys understand the signals. They understand how to say something that looks like nothing, but actually is something. I mean, is it even insider trading if you're trading on a policy you haven't even made yet? That's the world we live in now, where perception is more powerful than fundamentals, where tweets move markets more than earnings, more than data, more than anything else. And what does this tell us about the supposed independence of the Fed? I'll tell you what it tells us. It's a myth, a total fairy tale. The very idea that the Federal Reserve is insulated from political pressure is a joke. Everyone acts like the Fed's this neutral technocratic body making cold, data-driven decisions. But the truth is, the Fed is just another arm of the government, a creature of politics, always has been. If it wasn't political, then why are Fed chairs always so obsessed with optics? With not offending markets, why do they telegraph every rate hike like a parent preparing a toddler for bedtime? You ever seen a truly independent central bank operate like that? And here's the kicker. Trump was right the first time. Not because Powell is bad for the markets, but because he's part of the problem. He's been political from the beginning. Every Fed chair is. The idea that holding rates steady in an inflationary environment is somehow neutral policy? No, it's a political choice. It's a way of kicking the can down the road. And get this, Trump accused Powell of being political for not cutting rates. That's the level of insanity we're at. You see, real independence, if it existed, would look like a Fed chair saying, we're raising rates to 7% tomorrow because inflation is out of control. And then doing it. But that's not going to happen because the political cost would be too high. The stock market would crash. Unemployment would rise. The debt would become unserviceable. So Powell stays frozen. He holds the line. Not because it's good policy, but because it's the least bad political option. You want proof that the Fed isn't independent? Look at the debt. We've got $34 trillion in national debt, and growing. At 5% average interest, that's $1.7 trillion a year in interest payments. More than we spend on defense. More than we spend on Medicare. It's the biggest line item in the budget.
Gold was down 3%. The gold stocks, the GDX, was down 6.5% on the week, and the GDXJ was down 7%. Why? Right? It makes no sense. Yes, I know gold went down, but so what? It went down to 3,300. That is a very high price for gold relative to all of the earnings expectations for these gold stocks. Nobody that covers gold last year expected gold to be at 3,300. In fact, when gold got to 2,000 a little over a year ago, nobody thought it can go any higher. They all thought that was the top. And here we are more than 50% higher. And stocks like Newmont and Barrick are lower than they were back then when gold was at 2,000. Now there are some stocks that are higher, but the two biggest stocks are actually lower. So why should they even go down at all? They should just be going up every day, regardless of where gold is. Who cares? I mean, if gold's bopping around above 3,000, that is a phenomenal price. In fact, we got the Newmont earnings. They were the first major gold company to come out with earnings. We got those earnings after the market closed on Thursday, I believe. And so Newmont beat its earnings estimate by 42% above what analysts thought they were going to earn. That is a massive beat. Their year-over-year revenue in the quarter was higher than the prior year's revenue by 25%. That is a huge increase in revenue in a year. But their profit, quarter over quarter, were up 127%. I mean, how many companies in the S&P 500, Newmont's the only gold company there, are going to report year-over-year profits up 127%, a crazy amount. You would think, oh, this stock's going to be way up because, gold was up like $50 that day too. It was a day that gold happened to be up. So gold's up $50, the earnings come out, and the stock's up like 2% that after hours. If the price of gold went to 10,000 tomorrow, right, and then it went down to 9,000, right? Would these stocks really have to get killed, especially if they barely moved up on the move to 10,000, right? Once you have this kind of breakout, which is what we've had in gold. See, what people don't really get is that for years and years and years, gold has been underpriced and underowned, right? Investors don't own it. Central banks have a very small amount. If you look historically, even though they've been buying a lot of gold, if you look at the gold that central banks own as a percentage of their total reserves, it's still historically low. It's not as low as it was, but it's still below historical average.
In part one, we exposed how gold nearly hit $3,500 on a Monday night, how the dollar was getting absolutely crushed, and how a single Truth Social post from Donald Trump flipped the entire market on its head the next morning. That alone tells you everything you need to know about the fragility of this system. But it goes deeper, because that post wasn't just about calming markets. It was about salvaging confidence. Confidence in the dollar, in the Fed, in the entire rigged game we've been forced to play for decades. But here's the thing. Confidence once lost is impossible to get back. You can fake it for a while, sure. You can prop it up with reassuring tweets, press conferences, temporary strength in the dollar index. But it's like trying to tape the side of a dam after the cracks have already formed. It doesn't hold. And gold knows that. Gold is truth. It's a barometer of trust. It doesn't yield, it doesn't promise, it doesn't lie. And right now, it's telling you the world is rapidly losing faith in the entire fiat currency experiment. Now, when I say gold is going to $5,000 or $10,000 an ounce, people laugh. They roll their eyes. That's just Peter Schiff again, they say. But here's the problem with that reaction. We're already halfway there. Gold is closer to $4,000 than it is to $2,000. And that's with most investors still completely asleep at the wheel. Imagine what happens when they finally wake up. Let's talk about what $10,000 gold actually means. It doesn't mean you're getting richer. It means your money is getting weaker. It means the dollars in your bank account buy fewer goods. It means the system is broken to such a degree that we need to reprice reality. And gold, it's the measuring stick, because everything else is floating in fiction. Stocks, bonds, real estate. They're all priced based on confidence in the dollar. And when that goes, the entire illusion goes with it. But here's the kicker. Gold isn't rising because inflation is out of control, though it is. Gold is rising because people are finally starting to see the endgame. They're starting to understand that the Fed can't save them, that the government can't fix this, that our problems are structural, terminal. We are $34 trillion in debt. We're adding over $2 trillion a year during peacetime with no recession. What do you think that number looks like when we get a real downturn? $3 trillion? $4? And where is that money going to come from? Not taxes, not productivity, not savings. It's going to come from the printer, which means inflation isn't just here to stay. It's going to get worse, much worse. And when inflation gets worse, the Fed will do what it always does. It'll pretend to be tough. It'll make some hawkish statements, maybe even hike rates a quarter point, just to prove they're serious. But behind the scenes, they'll be pumping liquidity. They'll be suppressing yields. They'll be bailing out anyone and everyone who screams loud enough, because that's what this system has become, one giant bailout machine. Don't believe me? Go back to 2019. We had already returned to repo market bailouts before COVID even hit. They couldn't even normalize rates before a crisis. Then came COVID, and the Fed printed more money in 18 months than in the entire previous century. Now they want you to believe they're going to mop it up with a few basis points? Please, you don't clean up a heroin overdose with aspirin, and the markets know it. That's why gold is making new highs. That's why the dollar is slipping. That's why even countries like Saudi Arabia are cutting US exposure and cozying up to China. The dollar's days as the world's reserve currency are numbered. And no, it's not going to vanish tomorrow. But we've already passed the point of no return. The BRICS are forming an alternative system. Central banks around the globe are buying physical gold hand over fist. Even countries that have historically relied on US financial infrastructure, like Brazil, like South Africa, are exploring cross-border payment systems that bypass the dollar entirely. And here we are in the US, still talking about the next Apple earnings report like it matters in the long run. It doesn't. What matters is purchasing power. What matters is what your money can buy a year from now, 5 years, 10. And if your wealth is denominated in dollars, you're holding an asset that's guaranteed to lose value. That's not an opinion, that's policy. Meanwhile, what's the Fed doing? Still pretending. Powell's sitting there with a straight face, saying inflation is under control while rents, food, insurance, and healthcare all spike double digits year over year. You ever notice how the only people who believe inflation is cooling are the ones who don't buy their own groceries? They're lying, or delusional, or both. And here's where it gets dangerous. Eventually, the market calls the bluff. Eventually, the bond market revolts. Foreign creditors dump treasuries. The dollar breaks down. The Fed faces a choice: raise rates to protect the currency or print more to prevent a crash. They'll print, always. And that's when gold goes parabolic. I'm not talking $50 up. I'm talking $500 in a day, $1,000 in a week, because all of the pressure, all of the distortion, all of the suppressed reality finally breaks through. The dam collapses, and everyone who wasn't prepared is left holding worthless paper. That's the scenario no one wants to talk about. That's what your financial advisor isn't going to tell you. But that's the future you have to be ready for. Because every sign, every data point, every policy move is pointing in that direction. We've already crossed the Rubicon. Now people ask me, Peter, what do I do about it? Here's what you do. You own gold. Physical gold. Not paper promises. Not gold futures. Not ETFs that settle in cash. Actual bullion. Because when the system fails, gold is the reset. Gold is the asset that rebalances the balance sheet of the world. And silver, that's the leverage play on the same thesis. More volatile, sure, but potentially even more explosive. And if you're really brave, own the miners. I talked about this in another video, but the miners are the most undervalued asset class on the planet. They're leveraged to gold, but they've been left for dead. That's going to change. And when it does, the revaluation will be historic. But the first step? Get out of fantasy. Get out of the idea that the Fed is going to engineer a soft landing, that inflation is going to vanish, that we're going to grow our way out of this debt. We're not. We're going to devalue. We're going to inflate. And we're going to blame everyone but ourselves when it all blows up. But you don't have to be a victim of it. You can prepare. You can protect. You can preserve. That's why I do these videos. Not to scare you, but to wake you up. Because the alarm is ringing. The cracks are showing. And gold is already running. You've still got time, but not much. So don't wait for another tweet to move the market. Don't wait for Jerome Powell to finally admit the truth. Don't wait for Trump to post again before you protect yourself. You already know what's coming. Act accordingly.
Stay informed about the latest developments shaping the precious metals markets with regular updates from the Finance Daily team. Not only that, but as a subscriber, you'll also receive timely silver and gold price notifications and early access to groundbreaking news unavailable to the general public. Join our free gold and silver newsletter today, link in the description.